Hello guys, welcome back to the channel. It's been a while since I've made another video, but figured I'd just make a quick video on a trade that I took today, as I've got a lot of people that have been messaging me on TikTok and whatnot, just asking for more sort of uploads on sort of the way I trade and how I can help them as well. So yeah, let's just get straight into it. Just a little quick sort of breakdown of what I was looking at when I was taking the trade. So just sent this to myself. Let me minimize this and get this out of the way. So this was a trade that I basically took just after the cash session opened. It was 10 minutes after, well, not 10 minutes actually, it was just literally a few minutes before the news came out. So I think 2:45 UK time, so that would have been 9:45 central time. So yeah, just waited basically for a setup to play out, got in, as you can see from here, 10 contracts or 10 micros, and I was able to close out here for 18 points. And here I've just screenshot some of the confluences that I'm going to go through on the charts with you guys right now in this video, and also speak a little bit about gamma exposure and how you can use it in your trading as well. So let's start off with this chart. You can basically see here we've got a 5-minute chart here. Obviously got my levels drawn out that I was looking to take trades from, and as you can see, this chart literally has just got the very basic information. It's got the large trade filters, and then obviously you've got your cumulative volume delta here at the bottom. To be fair, I know people that literally just trade purely off this chart. They don't need anything else. Maybe they might use a volume profile on another screen or on another sort of another window. They'll have a volume profile open and then just execute off this. But yeah, this is just something I have in front of me that actually does help sort of filter out noise. But yeah, getting into it, you can see here, this is the open on this candle here. Yeah, this one here. So yeah, this is the open here. We've come up to +1, sold off. Now you could have taken a short scalp off this sort of buyer here getting trapped, but to be honest, I'll just explain why it wouldn't have been a good idea to take that, and obviously to go long instead. I'll get into that in a minute. But yeah, obviously I'm just waiting for this to sort of play out, this chop. Typically at market open, there's always chop. Like, you're always going to get chop. Sometimes obviously it will just fly upwards. If we're in a trend in there, it will just fly upwards or fly downwards, whatever the trend is. But typically I always recommend at least just wait 10 minutes. That's it. Just wait 10 minutes, wait for the market to settle, and then start looking for positions. So yeah, that's what I'd recommend. But anyways, getting into the trade, I've waited for this to sort of break, and as soon as I've seen some of the activity happening here after we've broke this level that I'm looking to get into, all I'm looking for is a retest. And we do get that retest here off this 5-minute candle over here. We get a nice retest here. You can see here as well there's some trap selling taking place here and some aggressive buying stepping in here. So once I've seen that, I'm already in the position, and obviously targets. Yeah, at this point, if you're near +1 deviation, you're looking to see if we can hold up above that and then go to +2. That would be what you'd be looking for. So yeah, that's just sort of triggers on this chart what I was looking for. CVD, I mean, you can see here we was pushing up higher as well. We do get a little pullback and then we just push back up. But yeah, I don't really use CVD to look for some type of confirmation. I'll use it mainly as context rather than confirmation. It's maybe like just the icing on the cake. But yeah, that's it for this chart. I'll go into another chart and show you the other confirmations on there as well. Okay, and then hopping onto this chart, let's get rid of that cursor. Obviously you can see it now, a little bit more nitty gritty of what's going on in between sort of some of those 5-minute candles. Obviously this is a different type of display. It is a 8-tick Renko chart rather than a time-based chart, and in my opinion, I just think range and yeah, just range charts are just much better for entries. Sums up information more clearer than a time-based chart. Time-based has a lot of noise going on in it, so it's better to use time-based charts to visually look at what's going on, and then zooming in, use their range charts to see what's going on at certain or in between certain price ranges. So this is just the 8-tick Renko chart, which I just prefer. So yeah, as you can see, this is where we break. And then you can see here, I do have an alert here to go short. If you see my previous video, I do talk about sort of semi-automation / alerts and how they can help you utilize, or how you can utilize them to help you with trading. But yeah, we do have an alert here. That's not something I was looking to take. I will explain in a second, like I said, why it's better to go long rather than go short. But yeah, retest into this level, which was the value area high on the ETH. So on the electronic trading hours, this was the value area high on the TPO and also on the volume profile. So we get this large buy coming in here, or I should say we get this large aggregate amount of buying coming in at this price level. And obviously I did show you on the previous one, previous chart, obviously that there was a seller as well present somewhere within sort of this price range getting absorbed as well. So yeah, as you can see as well, we do get some alerts triggering a little bit later on. So if you did miss out on this trade here you've got confirmation. You can still get in around here, set your stops around here. Risk to reward is still good. And yeah, you would have been able to lock in a nice move all the way up to here. And this is probably where I took profits. I think I took it around here. Just waiting to see, obviously, maybe if we can extend higher. But as soon as I've seen a lot of buying coming in here, 9 times out of 10, when you see this type of activity at highs, this is going to get reversed some type of way. Like, even if it's like a couple of points, that's a lot, especially if you've got size on. You don't want to be giving away that type of profit back to the market. So when I see stuff like this at highs, I'm already exiting like 90% of the position. And then yeah, you can see we've set the initial balance high, and I've disconnected my charts because I have alerts on, so the sounds just keep coming on and it's annoying to listen to them. But yeah, you can see here we've come to initial balance high, or we've set the initial balance high, retested it, maybe a tick or so, poked the head out of it, and then accepted back, retest back. And this is another setup that I would probably take, but I already made profits from this, so I'm not looking to take another trade again. That's typically how I like to sort of move in the market. And then yeah, you can see we've sold off back to our value area higher. Don't know if the market is holding there, but yeah, that's basically what's happened. And then this is the last bit of confirmation I'm going to show in this video. So as you can see here, it's another sort of study. I'm sure a lot of you that are familiar with Sierra charts, there's plenty of different people that have created this type of study. It's not rocket science to make. The where I saw it from was Order Flow Labs, and I've seen other iterations of it, but yeah, I've just made my own to sort of help me as well. But yeah, anyways, you can see here we break out slightly, retest. The light blue short is showing some exhaustion, so there was some selling exhaustion coming in on these last couple of bars, and then we just get some aggressive buying just coming in here, which you would have seen from the previous charts on the footprint, and also on the 5-minute chart there was some pretty nice buying activity taking place here. So that was my confirmation to get in after we retested this value area high. And then yeah, obviously like I said, we traded to the initial balance high that we set, and then we just sold off. Just thought I'd show that as well, as that was something I was also looking at whilst I was trading. And then before we just wrap up this video, or not, let me not say before, because I got to show you guys something I've incorporated into my trading, which is obviously the gamma exposure levels. But yeah, if you see here, this is obviously just a TPO with volume profile. You can see I've marked out the POC, the value area high on the volume profile, and the value area high on the TPO. And I will mark out the ETH levels mainly before we start the cash session, as those levels are areas where most likely participants will look to defend. And I've just noticed over the past couple of months that these levels tend to have really good reactions, whether it'll be a break and retest or just a straight retracement to it, or from it I should say. These levels just work like really good with the way I want to trade, and the data that I've collected as well shows that, you know, if I execute the trades from these levels, then long term it's pretty good for the account. So yeah, that's basically how I would utilize how I utilize the TPOs and volume profile. So yeah, just draw out the pre-market levels and then wait for a retest. Ideally wait for a break and retest, but if not, wait for just a normal retest, and then see if we get confirmation on our other charts like the footprint and the previous chart I showed you with the volume sort of bar chart as well. So yeah, now I'm going to explain basically why the play was to go long and ideally not short. Um, this, if anyone doesn't know, is just gamma exposure. So it's options flow. And I don't know, I don't have all the sort of information in front of me, but option market is really, really, you know, like over the past couple of years has a major impact on what happens on the futures market. A lot of dealers, when we say dealers, I just mean institutions, people that are trading options will hedge their positions in the underlying assets, which would be on the futures market, or they might actually trade the stock instead. They'll do their business on there as well to obviously make sure that they're not too exposed to one particular asset, and it just balances out their portfolio. So yeah, options is, you know, in the last couple of years had a big impact on that. I'm sure there's other videos on YouTube that explain like in more detail how that has happened and why that's happened, but yeah, that's just a little insight of why I'm starting to use options data to sort of help me with trading. But yeah, getting into it, you can see here, shouldn't zoom in like that. We can, let me actually, do I have a pen? No, I don't. I'll do that for the next video that I do. I was going to try and sort of have the tools so I can draw out what I'm looking at, but I'll just use the cursor here. But yeah, as you can see here, we're in a really nice positive ratio environment. So typically the rule of thumb is if it's above 0.50, that is positive sort of gamma exposure environment. If it's below 0.50, it's a negative gamma exposure environment. So if the top of my head, sometimes I get this mixed up. I think when we're above 0.50, market makers typically will buy dips and sell the rallies that occur. And then when we're in a negative gamma exposure environment, which is below 0.50, they will sell the market as it drops and then buy the market as it rallies. That's basically the rule of thumb. Now that doesn't always happen, but that's typically what they say should happen on the underlying asset if we're in these particular sort of environments. But yeah, so that was sort of a confluence as well. Obviously when I showed you, there was a little dip, not a major dip, but there was some type of dip into a key area. And then yeah, if we look here as well with the gamma exposure, these are basically where market makers, well, not market makers, this is basically the area of interest where people think the market is going to go. It does look a little bit like a DOM volume profile or like a DOM order book, where you can see, like, if for example, if I bring this over here, like here for example, you can see here the sort of volume bar sticking out on the higher numbers. So it does look a bit like that, but it's sort of different. There's videos on YouTube, like I said, that explain things higher, not higher, but explains things in more detail about what gamma exposure is and how to use it in your trading. But yeah, see, knowing that we're in this type of environment and we pretty much have no gamma exposure to the downside, we're in buying territory, and there's quite a bit of gamma exposure that's concentrated at these higher prices. My sort of thesis was hoping for price to move towards that, as typically these pretty much these areas where there's a long like volume bar, these areas basically act as a price magnet if we're in the close territory to it. So at the time, I think it was 6880 on SPX, and this was at the point the highest gamma strike at the time. So this was basically, they'd call it P1. So P1, P2, P3 obviously positive, and then N3, N1, N2, N3 obviously negative stuff. So yeah, this was obviously the highest strike. I think we was obviously somewhere in this territory, and I was banking on us moving higher. Didn't really see any reason for us to trade lower. We're not below the zero gamma level, which is the zero gamma level is just the area where it's basically the area where there's no gamma between selling and buying. So it's like the 0 point basically. Think of it as, you know, when you have your CBD, obviously once you go below 0, you go all the way down to the negative numbers. Once you go above 0, you go to the positive numbers. That's basically what zero gamma level is like, if I was to explain it in sort of layman terms. But yeah, that was my thesis. We're around here. We have a high gamma strike around here. And I was just hoping, or not hoping, but my sort of thesis, if we're in this environment, really and truthfully, the odds are that we should trade to here. All I need to do is find a level nicely on the ES chart to basically get into a trade, and that's what I did. So yeah, that's just a little brief explanation on gamma exposure and how to utilize it. There's plenty of videos on YouTube that you can find on gamma exposure and how it helps you with trading. But yeah, just thought I'd obviously go into explanation on that. And then yeah, let me exit that. Like I said, this is a trade that I took. I showed this at the start of the video. It's a pretty good trade, and yeah, nice way to wrap up the end of the week. Decent session overall. Decent week so far as well. Normally and typically December price action is quite dead. But yeah, we're doing okay so far. But yeah, that's gonna wrap up this video. Hope you guys enjoyed. Leave a comment, like, do whatever you want, and yeah, I'll catch you on the next one.